because you guys recently tried to buy a company called Anadarko. You were not, despite what some people say, in a bidding war because you never rebid. Occidental bid sort of against themselves a couple of times. Why didn't you come in with a higher bid?
Look, we really liked the deal that we did there. Great fit between our assets in multiple basins around the world. Really a lot of opportunity to create value for the shareholders of both companies. We did a deal that we believed was fair for the Anadarko shareholder and fair for the Chevron shareholder. And we're well on our way to integrating when we had another bid come in, which is unusual in our industry. And it was pretty clear that the other bidder was highly motivated. And look, we would have eroded shareholder value. And we're in a commodity business, and we have to always remember that capital discipline matters in a commodity business. We looked hard at it, and we chose to stand behind the deal that we did. Was approved by the two boards. And when Anadarko concluded that another offer was better, we chose not to go there simply because we work for our shareholders. That's who I have to think about, and we would have eroded returns and value for our shareholders.
So should the market assume that Occidental overpaid?
That's a question for others, not for me. I'll just tell you the deal we did we thought was good for our shareholders, and we chose not to go to a place that we thought would have eroded value for us.
Was Anadarko a one-off, or are you still on the hunt then? You obviously identified yourself as a potential acquirer.
Yeah, we've got a great portfolio right now. This would have made it even stronger, and it would have allowed us to strengthen positions where we've got core competency and capability, geographies where we've got existing assets where we could have found real synergies. So it was a somewhat unique match. It wasn't just all about the Permian. The Permian gets a lot of attention. We liked their deep water position in the Gulf of Mexico, their LNG position in Mozambique. So we saw a really nice fit between the two companies, and it was something that was a moment in time and a great value opportunity for us. And unfortunately, we've not captured it. But we've got a great story.
You helped set the bar, right? I mean, you kind of identified where the value is and where valuations may be. Do things still look relatively well valued in the Permian? The stocks have not responded to the worst performing sector this year, down 20% or so as a group.
Yeah, certainly there continues to be a belief that there's some downside risk in oil markets right now. I think that's weighing on the entire complex. And, we continue to look at all opportunities to invest in our business, but we've got great organic opportunities that will keep our business growing for years and years and years. We don't have to do anything, and we always watch these things.
Well, you got $1 billion for walking away. I would love to get $1 billion for walking away. You've got $2 billion from a sale in the North Sea. You're on your way to $5 to $10 billion in divestitures over the next 2 or 3 years. What are you going to do with that cash? If you don't make another deal, you're sitting on a few billion in free cash flow.
Well, I talked about our shareholders. Shareholder distributions are very important in our industry. We know why people hold our stock. They expect to see distributions back. We've increased our annual dividend payout for 32 consecutive years, a track record that we're very mindful of. We're buying back shares at a rate of $5 billion a year right now, and we can still invest in our business organically to grow cash flows, to continue to grow that dividend into the future, and we have surplus cash that we're redeploying through a share buyback. So we've got a very balanced approach to capital allocation and intend to continue to use the cash that way.
Why is oil at $53?
Well,
it's amazing. We see Venezuela. By the way, you're in Venezuela. I know you've been working there to preserve those assets, and it's been a dangerous situation for your employees. So I don't want to go too much into that. We're seeing Libya. We're seeing all these things happen, and oil can't get out of its own way, Mike.
It's probably as complex an oil market as we've seen for a while. On the supply side, you've got things like the tragedy in Venezuela. It looks like potentially a war underway now in Libya. Sanctions on Iran, ships on fire in the Straits of Hormuz. A lot of things that would create concerns on the supply side. But here in North America, we continue to see strong supply growth out of the Permian Basin. And I think the thing that really, as of the last few weeks, seems to be weighing on the market are concerns about economic growth in the globe. The trade issues that continue to be on people's minds have created, I think, an ongoing anxiety. And so that's manifesting itself in some concerns about demand, which you see in the price of the commodity.
Michael Wirth, CEO of Chevron, thank you for taking some time here at the JP Morgan Energy Conference. We do appreciate that very much.